Bitcoin has done this exact pattern every single time before it has crashed cryptos during this bear market, which began in November of 2021. We're now nearly 9 months into the bear market, and this pattern has played out each time, which has led to 36 to 46% dump on Bitcoin. So far, we are 13% down. Let's take a look at how much further we could go down in terms of price and how much longer we have to see until this occurs. So make sure you've smashed up the like and hit that subscribe button with the bell notification icon. You guys are getting the drift of how this is working out and looking at our trades and longer term investing as well. We're looking at both sectors here, using the trading to invest in the long term. So let's take a look at the video today. We've followed this up over the past several days, starting with the video here on the 7th. Now, there's a lot more detail in these videos, so let's get to the update. But for anyone that has missed, this is essentially what we're looking at. We're looking at a weak Bitcoin bull market. I was hoping for higher prices around 24,500, but what I hope for and what actually happens in the market are two different things. What we all hope for doesn't mean it's going to happen. We have to look at what is in the facts on the charts and what the market is telling us, what the sellers are doing, what the buyers are doing. And we can see this in real time using the charts. That's why we avoid the news to make decisions on, and we use the charts to make decisions. This is going to help us. So this video specifically looking at that breakout. What happened the following day? Well, we got the breakout. So this has started to play out. The pattern for the crash begins with the run up. You need to move up before we can get the crash. And so far, this has been working out to a T. And then from that video on the 8th to the video on the 9th of July, we were looking at the rejection on Bitcoin, where this can get rejected, and the patterns we don't want to see, so the probabilities, the weakest to the strongest. And if you start seeing the weakest, then that gives you signs of there are potential shorts coming up for trading. Rather than trying to catch a falling knife, maybe it's better to go with the shorts. And if we're looking for longer term stuff, sit back and relax and wait for the bigger term pictures, which is what we'll look at in videos coming up this week. There are some really, really good patterns coming up. So make sure you are subscribed, do all those things down below, and leave me a comment with your thoughts on the market right now. So this was the rejection, and then the patterns that we didn't want to see. So the 9th, in terms of didn't want to see, this is looking at the weakness. So this is where we are now. You can see we're several days down from this video. Remember, we're looking at these specific patterns and what the buyers and the sellers are telling us if a particular pattern plays out. If we get the pattern that plays out with the rejection, obviously the sellers are in control. And then from that point, the sellers take control and they start to look for the next support level. If they found support at $20,500, that would then tell us that there are going to be more buyers in control. It's going to be a much stronger market. We use the 50% tool here to let us know where the balance is in the market and where the buyers are looking to get stronger. And that gives us a much deeper understanding of what is happening in the market. Now, the buyers didn't step in at that point. Therefore, we now know we're in a weaker side of the market, and the emphasis has to go with the bears. So the bears are in control. They've broken the 50%. They've come down, and pretty much one of the last saving graces for the bulls in the short term is this area here, and that area is between the low, which is 18,600, and where all these closes came in here. You can see it's around $19,300. So we're still just above that at this point in time. So the bulls still have some balls left, but it is fast running out. The idea is that they can hold up here at these levels and then push the market back up. Now, the weakest side to this is where the bulls will lose their balls, is if we get rejected at $20,500 on the way up and start to plummet from that point, and we could be then pushed into a more significant low. That would show a lot of weakness and probably further downside and come back to test the 18,600 level and potentially the 17,500 level. There is some silver lining to the end of all of this. We are in July, getting to the middle of July, and since February, which is when the video I put out on the channel, looking at the cycle of Bitcoin, the Bitcoin 4-year cycle, we are getting closer to the end of this bear market. In terms of pricing, a dollar cost averaging area, it doesn't look too bad. And I'll look at that in just a second, but just looking at it on the specific timeframes here to tell us the news, what's happening in the market right now, this is the weaker test to the 20,500 from this point. Maybe we fall to the 18.6 and test it, but anything tested underneath the 20,500 is very, very weak for Bitcoin and probably majority of cryptocurrencies. The stronger setup for the long side, for a bigger push to higher prices, for a bigger trading opportunity for cryptocurrencies to go long in cryptos, and of course Bitcoin, is a break above 20,500 and then a retest to the top side of the $20,500. So that's what is required now. So this has happened the last few times for Bitcoin. Every time this happens before a crypto crash, this is what we've seen. The market drop, come up for a bounce, and then get rejected on the second attempt at those prices. And that happened again. This is the fourth time that it happened. And of course, if you're watching the charts, maybe watching this channel because you're subscribed here, as all good viewers are, and liking the videos before they start, then we know in advance that these sort of patterns play out regardless of what the news is telling us and what's happening out there and all of the noise. We can see this happen in advance and get set up and not get caught out. Each of the last times, this is the exact pattern that we've gone through. The dump, the reaction using our swing indicator here. Again, link to this is in the video description if you want to use the Gann swing indicator to help you identify where the trends are and when these swing prices come in, the significant prices. Link is down there. You can see we tested and it failed to hold above the bounce. It then retested a few days later and failed to hold above that bounce. So there's another couple of key things that we can look at here to give us a forecast over the next 3 to 5 days, looking at timeframes and price ranges as well to hopefully identify some strength very early on for any sort of upside moves, which obviously help out in some short-term trades. Looking back at the previous test in February, March, and April, so that is the Bitcoin conference top. This was all of the excitement for that conference. Right, we have the price at the top here at around 45,800. You can see the attempt held above for just slightly longer, had a few more days, but it just never made it there, and there was no confirmation of a break above that swing top. The next swings that came in were underneath, so it's a weaker swing. And then we get the breakdown and the rest is history from there. So that's a short side. The market is showing you the sellers are in control. The bulls don't have the balls here to keep pushing the price higher, but the news was telling us that we should have been going a lot higher at that point. There was a lot of excitement about $51,000, $52,000 Bitcoin, but what is happening in the chart is the facts, and the facts are telling us that the market wasn't ready yet. Previous to that, we had the next bounce, and this was the first one, the big dump. Market tried to come back. There was not even a test above the previous price. There was barely a few bucks, but there were no closes above that level. And that was very, very weak from that point. Got the dump, and that has now occurred again for the fourth time. So how long can this take? Well, just looking at the days from that second attempt to the lower swing top, and then obviously in this case it's a few bucks above, but you'll see the other lower swing tops. It was only a few days from those tops using the top that broke out and had a close, came underneath until that final swing top, 8 days. The first one was 2, there was 5 to 6 days, and then you had 8 days, all right? Coming to the next and the third time that this exact pattern happened, played out and crashed cryptocurrencies, there's the top that broke out to the lower swing top that failed, 6 days. So you can see a pattern there. There was about a shortest time frame of about 3 days to the longest one of 8, but you can see there was 5 to 6 days each time. So this is the breakout, and 5 to 6 days comes in tomorrow, the 13th of July, but I think we've got a long way to run to get up to that point. So we'd have to then look at 6 days, so that's the 14th of July. If not, we would then look at 8 days out, that's the 16th. So this is going to happen probably within the next 1 to 4 or so days. And the other thing to look at is where will this then retest? Will we get back up and test the underside, which is 21,700? That's going to be a very important level. Or are we going to test the underside of the 50% level, which is 20,500? So if it happens in the next 1 to 3 or 4 days, test the underside, that would probably be another, well, that's obviously the weak signal because the price has been rejected, and it also fits into our timing. What's happened in the previous times, every single time during this bear market, it's been rejected within that 5 to 8 or so days, and that is going to fall within that right now. There, of course, is going to be instances where it finally fails, and that any sort of signal across anything in investing and trading will eventually have to fail. But the idea is to understand what it is that we're looking for and then see if the signal is failing and get on board to the opposite trend as well. So at the moment, it's to the downside in the very short term, but the bulls still have a little bit of balls left between 18,600 and 19,300. So if they can hold that and break above, that's going to go back to the bulls. If it doesn't hold and fails underneath 20.5, bulls have lost their balls, and that goes to the bears because we get rejected yet again. So that's where we're sitting for this this crash on cryptocurrencies every time. Now, the big point to note here is within investing facts, most people are wrong at the extremes. You can hear we've got a lot of extreme downside targets for Bitcoin. So although we're spending a fair bit of time looking at the chart, looking at what is happening on a daily basis, this is important so that we don't get wrapped up trying to catch the exact bottom, just to understand what's going on here. And looking at a bigger term time frame, the dollar cost averaging investing, then we don't want to be trying to catch the exact lows. We just need to be in a reasonable range for dollar cost averaging in when the market is extremely weak. So I've got a video coming up on that on the channel this week as well. Most money is lost predicting the tops and the bottoms. We don't need to predict tops and bottoms. We just need to take profits from the middle of the run. So any sort of chunk out of the middle of the run, and that goes for any time frame as well. So if we are trading these shorter term time frames, what's happening here at the moment with this possible move up, we don't need to catch the exact low or sell the exact top to make a profit. It's just knowing what's happening between that move, just like we looked at on this video here with the pump, and how that looks on a particular chart is just catching the middle of the move on a shorter term time frame, and then we're just looking at grabbing that little section of the move to make profits, to then reinvest somewhere else or live on those sort of profits. That's what we're looking at there. Bitcoin fact at the moment, it's never closed below the 200-week moving average. So just taking a step out, looking at the longer term time frames as well, reasons that we could then see further downside is that we haven't seen this in history. You can see the 200-week moving average here, where Bitcoin has basically bounced off it at each of these bear market bottoms. You can see the bounce and then another bounce. We've touched it. It's attempted to close above. We had it again in 2018, again in 2020, and last month was the first time that we closed underneath the 200-week moving average. So we're keeping that in mind as well, because this could then lead to further weakness for Bitcoin, and we could see further downside at this point. So we haven't seen that happen in history either. So for investing and trading, it's about keeping an open mind that we can be wrong in our thoughts of the market just shooting straight back up from any point. But of course, what we've been looking at in the short term is more downside for Bitcoin. So the good news, just to end on something a little bit more fun, even though we have said, this happens every time before a crypto crash, obviously the end of crashes means that we're getting closer to a bottom. I've talked about this for months since. May is when I was starting to look at it even more so, because we had that big crash that took out the 29K, and at least we started to test lower prices, but we're getting much, much closer, and it's working out in terms of our timing as well. So this is our timing for the macro cycle here. We're getting closer to where I'm looking for a low. That's going to possibly be late Q3, maybe Q4, early Q1 of 2023, but one thing at a time. As for the good news on Bitcoin, we're getting closer to a significant bottom. Now, I've got a lot of data to go through on that video update. The Bitcoin 4-year cycle is on track, looking at the timing coming in, and of course our Bitcoin buy zone, the golden zone of dollar cost averaging for the investment of Bitcoin in the longer term. Stick around the channel, subscribe and like if you haven't already. That's going to be a great video as well, so make sure you're there for that. And of course, links in the description. We have the free newsletter coming up in the next 24 hours, so join that. Bitcoin, real estate, and investing all together. Drop your email there, link in the top of the description. Bybit still going, $4,450 of sign-up bonuses using that link in the top of the video description. And I'll see you guys at the next video. Ciao for now from Sardinia. See you then.